I'm getting so absolutely tired of every single trader, every single time, trying to catch the reversal rather than the continuation play. There are so many traders out there that nowadays still trade against the trend, and I think that makes sense because all that we see on Twitter, all that we see on social media are reversal trades. Why so? Because the reversal trades look oh so clean, and the reversal trades offer usually higher RRs. But in my opinion, the win rate definitely is higher as long as you trade with the trend. So in today's video, I'll exactly teach you guys one of the continuation strategies that I'm using on the charts every single day to catch continuation trades. I won't be wasting any more of your time, and I'm going to keep it as simple as possible. The first thing that we have to do is determine the higher time frame trend. I think this speaks for itself. So on the daily, on the 4 hour, simply watch and see what the higher time frame trend is. So for example, on Solana, I can now see that potentially we are forming a higher time frame trend, and then within that higher time frame trend, potentially we are also trying to form a potential higher low over here. Okay, this, guys, is the low relative to this higher high compared to this high relative to this low. So until we break through this low, the higher time frame trend is still towards the upside. Now within that higher time frame trend, what we often see are local uptrends. So for example, and local downtrends, of course. First, we saw a local downtrend over here with lower lows, lower high, lower low, lower high, lower low, lower high, lower low, higher high. So the local downtrend has shifted back towards a local uptrend. Now within this local uptrend, we have a lot of higher highs and higher lows as well. And at this is where things are starting to become interesting, because we want to trade obviously with a higher time frame trend, but also with a local trend. Now within this local trend, like I said, we are constantly forming higher highs and higher lows, as we can see over here. By forming these higher highs and higher lows, what are we doing? We are engineering liquidity. Why are we engineering liquidity within this local uptrend? Due to the fake break of structures like this. Due to the fake break of structures like this, we are engineering liquidity beneath this low and beneath the low over here, for example. Now, why so? Because of these fake break of structures and people thinking that these are valid break of structures, people long the breakouts or the pullbacks. They long the breakouts or the pullbacks, and where they're placing their stop loss of those late long positions and those invalid long positions beneath the low over here or beneath the low over here. That way we are engineering liquidity beneath this low and beneath this low. Now, what is this continuation strategy about? Simply, when we go to the theory behind it, when we have these local uptrends within a bigger uptrend, what we are waiting for is a flush to take out late longs by mitigating the liquidity that we engineer due to the fake break of structures within the local uptrend, as I explained. By getting this aggressive flush and taking out this liquidity, this high all of a sudden becomes significant to break. Why does the high become significant to break? Because the high brings us to lower lows compared to the lows that brought us to that high, and therefore the high becomes significant to break. And then what we are waiting for is an aggressive push towards the upside above that high to get a valid break of structure towards the upside. Then we can play the higher low, and then we can target higher highs with our invalidation over here, making massive profit on longs. Now, why are we not trying to short the price when we go back for a second after this push to the downside over here? Because you can say, okay, but Jip, the local trend is shifting to the downside because we are breaking through significant lows. Think about this for a second. What did I explain to you guys at the beginning of the video? I was asking you to analyze the higher time frame trend, the higher time frame analysis, and the higher time frame context. The local context, the local price action and liquidity doesn't mean shit if it's not aligning with the higher time frame context. In this case, we are within a higher time frame uptrend. We have this local uptrend. That's why we don't short the pullback like this. No, we wait for the pullback to trade back above that high all of the people that shorted the pullback are now underwater, then we play the higher low and then we target higher highs with our invalidation over here, targeting higher levels. Now when we translate this to the current Solana chart, we can see that first off we have this local uptrend within that bigger uptrend, and we have engineered liquidity beneath this low and beneath this low. Then we can see that we mitigate those liquidity pools over here with indeed a very aggressive push to the downside, and after getting that aggressive push to the downside, we get another aggressive push back towards the upside and we break structure over here, getting ourselves a valid break of structure. Then we can see that after that valid break of structure, we put in a fake break of structure over here. What are we doing with that fake break of structure? We are engineering liquidity beneath the low over here. Now this is where I start to become interested in longs. We have our invalidation over here. Our trigger is based off this aggressive liquidity sweep and this aggressive break of structure. Now I'm looking to execute where other people are getting stopped out, and in my opinion that will be beneath this low over here. This is where I execute my trade. My invalidation is beneath this low, and then I'm obviously going to target some higher time frame liquidity for Solana as well. And then we can see that we have some higher time frame buy side liquidity obviously aligning over here above these relatively equal highs. Now we can see that after playing the chart, indeed you get filled, indeed the price starts pumping, and indeed eventually the price will pump towards that buy side liquidity. And all of this happens, guys, after the strategy that I just explained to you guys. It's not that hard. I analyze the higher time frame trend. Then I go to the local trend and I analyze the local price section that is providing me with liquidity being engineered beneath certain lows. We mitigate those liquidity pools with an aggressive push to the downside. Then we trade back above that high that became significant due to the fact that it brought us to new local lows. But even though that high brings us to new local lows, it's not an invalidation for shorts. Why so? Because the higher time frame trend indeed is still trending towards the upside. And we play the higher low after indeed we mitigate the liquidity pool over here that we engineer due to this fake break of structure again, and then we fill our order with our invalidation over here. We have a clean draw on liquidity, and as you guys can see, it exactly gains us to our R.